Most people expect their monthly insurance premium to stay the same or even drop if they never file a claim. Yet bills often increase anyway, and that common confusion leaves many wondering what changed. This is Coverage Clarified, your plain English guide to how insurance really works. By the end of this video, you will understand the basic stages behind premium changes and know the questions worth asking a licensed agent. Remember, this is general education, not financial or insurance advice, and everyone's situation is different, so always talk to a licensed agent or qualified advisor before making decisions. Insurance companies set premiums based on the expected cost of future claims across their whole pool of customers, not just on one person's record, which means even a spotless history can see adjustments when broader factors shift. In the next segments, we will walk through the main stages of first-timer encounters when trying to understand a premium increase, so the process feels less mysterious and more manageable. A premium is simply the amount you pay, usually monthly or yearly, for the insurance policy to stay active and provide its coverage. Insurers calculate that amount by estimating how much they expect to pay out in claims for similar policies, plus their operating costs, and a margin for profit. Because the calculation looks forward rather than backward, a lack of claims on your part does not automatically lower the price. The company is still weighing future risk across thousands of policies. Many people are surprised to learn that their individual premium reflects both personal details and larger group data. So two drivers with identical clean records can still see different renewal amounts if they live in different areas or fall into different age brackets. When reviewing your own policy, documents look for the section that breaks down how the premium was determined, and note any language about rate adjustments at renewal. Asking a licensed agent to walk through that breakdown in plain terms is a useful first step, because it shows exactly which parts of the calculation can move even when your claims history stays clean. Most policies renew once a year, and that renewal date triggers a fresh look at the numbers behind your premium. The insurer pulls updated information from public records, credit reports where allowed, and sometimes new driving or property data to recalculate the expected cost of covering you going forward. Even with no claims filed, a change in one data point, such as a new traffic ticket that appears later or an updated property value, can shift the calculation. The process usually starts several weeks before the renewal date when the company mails or posts the new quote, giving you time to review it. Because the review is automatic for most carriers, it can feel sudden, yet it follows the same steps every year. A practical action is to mark your renewal date on a calendar and request the renewal quote at least 30 days early so you have time to compare options or ask questions. This habit turns the annual review from a surprise into a predictable checkpoint. Personal factors include any details about you or your insured items that the insurer uses to gauge risk, and these details can change without you filing a claim. Examples include your age, the number of drivers on an auto policy, the age or condition of your home, or even a new job that affects commuting distance. When any of those elements update, the insurer may place you in a different risk category, even though your claims record remains empty. For instance, a teenager reaching driving age and joining, the policy can raise the overall premium because statistical data shows higher risk for that age group. Likewise, moving to a new address can alter the rate because neighborhoods carry different claim probabilities based on weather, crime statistics, or traffic patterns. The key point is that the premium reflects a snapshot that gets refreshed, so keeping your information current with the insurer helps avoid unexpected jumps. When you receive a renewal notice, it is worth checking whether any listed personal details have changed since the last review and confirming them with your agent. External influences cover conditions outside your personal record that still affect pricing, such as rising repair costs in your region, changes in local weather patterns, or shifts in the number of claims filed by other customers in the same risk pool. Insurers spread costs across many policies, so widespread increases in medical bills, construction materials, or lawsuit awards can push premiums higher for everyone in that group. These factors operate at the state or even national level and are reviewed regularly by regulators, yet they still appear on individual renewal notices. Because they are not tied to your behavior, they can feel unfair, but they follow the basic insurance model of sharing risk. Reviewing the renewal letter for any mention of statewide rate changes gives context and helps separate personal factors from larger trends. Discussing those trends with a licensed agent can clarify whether shopping around at renewal might offset some of the increase. Monitoring changes means setting up simple habits that keep you informed before the next renewal arrives. Start by saving every renewal notice and comparing the current premium to the one from the prior year, while noting any new explanations the insurer provides. Next, maintain an updated list of personal details such as drivers on the policy, home improvements, or vehicle usage, so you can correct errors quickly. Many carriers now offer online portals where you can view the factors used in your rate, and checking those pages once or twice a year reveals trends early. If a premium increase appears without clear explanation, a short call or email to your agent asking for the specific reasons keeps the conversation factual and documented. These steps do not guarantee a lower price, but they give you control over the information the insurer uses. Over time, the habit also makes it easier to recognize when a quoted change is typical versus worth exploring other carriers. Premium increases without claims usually trace back to the annual renewal review, updates in personal risk factors, or external cost pressures that affect the whole group of similar policies. Understanding these stages removes some of the surprise and helps you focus on the parts you can influence. Before your next renewal, ask your licensed agent to explain which factors drove any change, whether your personal details are still accurate, and what options exist for adjusting coverage or deductibles. Also request a side-by-side comparison of the prior and current quotes so you can see the line items that moved. Subscribe to Coverage Clarified for more plain English guides that break down insurance mechanics without pressure. The plain English guides and any quote comparison links are gathered in the description. Remember, Coverage Clarified is general education, not financial or insurance advice. Everyone's situation is different. Prices and rules change and vary by state, so always talk to a licensed insurance agent or a qualified financial advisor, and check current details with an official source before making any decision.